Hey y'all, welcome to Howieverse. I'm your host Howie. I'm making ASML my largest position in 2025 in my own account. Personal plan, not financial advice. This company has close to no competition and just posted a strong quarter. Shipped its first $400 million machine that builds AI chips. If you believe in AI, you should definitely stick around. I'm going to show you the 2025 numbers and the thesis that convinced me that this is a buy to accumulate tactic for me. Also, stay to the end. I've got free ASML valuation PDF for you. So, firstly, what is ASML? ASML is a Dutch company that builds the machine other companies need to make chips. Companies like Nvidia design chips, TSMC, Samsung, and Intel manufacture them through foundries. ASML's lithography machine are how those chips get printed in silicon. This isn't just another tech stock. ASML is the only supplier of extreme ultraviolet or EUV lithography machines. This is the company that makes all modern technology possible. Without ASML, there is no AI revolution, no next generation smartphones, and no supercomputing. The story of this company is one of the most incredible tales of technology dominance you ever hear. So, why is ASML a monopoly? Let's be precise. ASML is the sole EUV supplier at the leading edge. Nikon and Canon, Japanese companies, exited EUV years ago. They're active in DUV or the deep ultraviolet, but DUV isn't viable for the newest 3 nanometer to 2 nanometer roadmaps. Chinese company SMEE is far behind and constrained by export rules. As a result, at the cutting edge, ASML effectively competition is time and physics. No other vendors, most of the vendors are 10 years behind. An EUV scanner is a moonshot machine, hundreds of thousand parts, extreme optics, a light source brighter than the sun per unit area. One EUV machine costs $400 million, weight 180 tons, and it takes about 7 Boeing 747 planes to ship one machine. The world's first commercial installation of High-NA happened at Intel's Oregon chip fabrication plant, or the fab, in 2024. Only 5 of these machines have ever been shipped. They are now being ramped up to make millions of chips on the factory floors of the few companies that can afford them, like Taiwan Semiconductor Manufacturing, Samsung, and Intel. This is one of the downside. A few companies can afford them. Nevertheless, this machine is not a simple machine, rather it's a really complicated one. So where's the company right now? Q2 beat. The company posted net sales of around 7.7 billion euro with strong gross margin of 53 to 54%, helped by a mix of EUV sales and services. Milestone, the first next generation High-NA EUV tool has been shipped, which is a key step for customers moving to the next node of advanced chip. Shareholder-friendly moves continue with an interim dividend paid and buybacks continuing under the existing program. In Q2 2025, the company purchased around 1.4 billion euro in sales, but caution for 2026, the management has indicated they cannot confirm growth in 2026 due to macroeconomy and trade uncertainty. Hey, if you're getting value out of this deep dive, do me a quick favor and hit that like button. It really helps the channel and show me that you want more in-depth analysis like this one. Now we can talk all the upside but ignore the downside. Here are the few key risks that I monitor could impede my investment thesis of ASML. Cyclical downturn or demand shock. The semiconductor equipment business is historically cyclical. A sharp than expected Downturn in semiconductor demand due to global recession, overcapacity could lead customers to slash capex. Second is the geopolitical escalation. Export restriction on China already capped ASML accessible market. There is a risk of further escalation. For example, the US could pressure the Netherlands to ban even more ASML products to China, perhaps order DUV tools, or China could retaliate against companies like ASML, for instance, by curbing exports of rare earth materials needed to lithography equipment. Thirdly is the trade policy and tariff. The unresolved threat of tariff of semiconductor tools for US fabs up to 30% as floated remains a near-term risk. If implemented, tariff could either raise prices, hurt demand, or squeeze ASML margin if it had to absorb some cost to help customers. Fourth is the execution of High-NA EUV. ASML is embarking on delivering high EUV systems, which involve entirely new optical system and significantly higher complexity. While the first few High-NA tools are being delivered to maintain early customer for R&D, there is always the risk of technical challenges or delay in ramping this new technology. If High-NA EUV faces setback, customer at 2 nanometer to 1.5 nanometer nodes might delay their roadmaps, which could in turn delay orders for those expensive machines. Number 5, customer concentration and competition dynamics. As mentioned before, these machines are really expensive and only a handful of customers make up the bulk of ASML revenue. For example, TSMC, Samsung, Intel for logic, and a few memory makers. If any one of these major customers changes its lithography strategy, for example, a shift to an alternative technology or a decision to slow capacity builds, ASML could feel the impact. Intel, for instance, is trying to emerge in leading edge manufacturing. If plans falter, ASML could lose some expected business. Some of the positive catalysts offsetting the risk factor are several catalysts and positive development that could unlock value of ASML or signal improving conditions. First is easing of trade or export issue. Any resolution or improvement in the US-China trade standoff or in tariff negotiation could be a catalyst. However, I doubt this will happen anytime soon, but this can become a buying opportunity by DCA or dollar cost averaging. When this catalyst take effect, it will set the stock for the upcoming tailwind. Second, acceleration of customer roadmaps. On the industry side, if major customer ramps up their nodes faster, ASML stands to gain. The third piece is new fabrication and government incentive. The global push for semiconductor supply chain localization is leading to construction of new fabs in the US and Europe. For instance, TSMC Arizona fabs and Intel planned expansion in Arizona and Ohio are slated for advanced node that need EUV. Fourthly is the financial upside, buybacks, dividend, and multiple expansion. ASML board and management have been shareholder friendly as evidenced by the largest buybacks and dividend growth. Here comes the fun part. These are my projection, not financial advice. The purpose of the following is educational and entertainment purpose only, so let's get to it. At the mid $700 per share, ASML trades around the mid 20s of PE on 2025, below its long-term average. In addition, the market cap of the stock is at around $300 billion, which is way below of the TSMC, Nvidia, Microsoft that invest heavily in AI infrastructures that require building more chips and more equipment. Bear case, $51 billion in revenue, 40 EPS, 18 PE. the $720 implied. Base case, $65 in revenue, $59 EPS, 20x multiple. It's $1,180 implied or 9 to 10% CAGR. And my bull case is 70 billion in revenue, $70 in EPS, and $25 in PE. The projection price in 5 years is $1,750. The current price of ASML is around the value of my bear case, with the multiple below the historical norms. I think I underestimate my bull case in the PE. ASML also pay dividend at around 1% yield and target double-digit growth over a cycle, so total return can stack in execution and policy corporate. A $1 trillion market cap by 2023 is highly plausible in the bull path if the High-NA and AI capex stay hot and policy risk fades. So for me, investment case of ASML makes sense. A company with deep monopoly in the most critical part of the AI chip industry. They are the sole gatekeeper of the AI revolution and virtually all future tech. They have massive technological moat protected by decades of R&D. What am I doing with ASML? I'm accumulating, not chasing. I'm building my largest 2025 position via DCA and buy the dips tactic as long as first, it is still a monopoly in this niche semiconductor sector, and second, the AI hype is still exists. But that's just my take. What I do personally, what do you think? Is ASML the ultimate monopoly stock or the geopolitical risk too high for you? Drop the thoughts in the comment below. I really want to hear your thoughts. Also, if you found this helpful, subscribe for weekly videos on AI, semis, and investing. And as promised, download my full August 2025 ASML valuation PDF in the description. This video is for educational, not financial advice, so do your own research. Thank you for watching. See you next week.